Hi everyone, George here with Can Do Tax, the Can Do Tax channel. Basically, what I'm going to explain to you here is how to do a return for a taxpayer that separate during the year. Now, keep in mind that this program, UFile 2023, this is UFile Online. It is a do-it-yourself program, which means that you should be preparing your return and nobody else is using the software. And if you are preparing it for someone else, make sure you've registered for eFile if you're getting compensation for it. Those are the rules. And on top of that, the CRA does have a limit of only being able to do 20 returns for each individual uh, person if if you are considering for family. Um, or friends. So that is a very limited scope of returns because the CRA wants people that are preparing returns for paid consideration to declare their income. So I'm starting with a fellow by the name of Fred DeMarco. It's a fictitious taxpayer with a fictitious date of birth, 17th of August 1996, with a fictitious social insurance number. And basically, when you get to marital status, you want to say that you were separated. And the following question in this ID section, which states, did your marital status change in 2023, including separated for less than 90 days? So let's say change, okay? And gender, that is something that's mandatory for Quebec, so we're going to put male. And did your mailing address change? We'll say no. Typically, sometimes it does, sometimes it doesn't in separation. Now, I'm going to stop right here and tell you a very important fun fact or a keynote fact that you need to know in order to do the tax return correctly. It has nothing to do with UFile. If you're separated in the taxation year, your separation has to be 90 days or longer, uh, including, let's see if we can get a help for that. Okay, we should have some help with respect to that. Okay. Uh, well, let's sum it up. To sum it up, your separation has to exceed 90 days, inclusive of December 31st of the tax year, in order to um, be valid. So let's say you are separated as of 15th of December, and you're doing your tax return, let's say early February. If that period of 90 days did not expire, then you're still considered as being together with your estranged spouse. So that's something you need to be cognizant of. That's why we have that question there of 90 days. Now, let's say, for the purposes of this example, the separation lasted more than 90 days and there is no way of reconciliation at all before April 30th or from here on and beyond. I'm simplifying the example so I can show you the key data entry that you need to do. All right, separated. Now, once I press next, our next button also functions as um, a save button, and it also activates any other item that you need. So change in marital status, uh, basically uh, you would say, what do we have here? No spouse, no spouse, with common law spouse, then married, with common, let's say this is the situation, with common law spouse, then separated. You're living common law before. Date of change in marital status, let's say it was um, early September, so 1st of the 9th, 2023. Let's put it this way. Let's select it like that, 2023, 1st of September, there. If eligible for the eligible dependent amount, there's a couple of important facts about the eligible dependent amount and how it pertains to a separation. You really need to be careful about that because basically what this means is for the eligible dependent amount is if you were a couple and you had a child less than 18 years old, and only one of the two people supported that child after the separation. The person that is not paying support for that child uh, and is caring for that child may claim what we used to call back in the old days the equivalent to spouse uh, amount, or now what is called the eligible dependent amount, which basically gives you puts you on the same footing um, as a two partner couple. And basically, as a single parent, what you're doing here is you're claiming one of your children as as your spouse. So it's meant to offset the burden of being a single parent family. So in this case, we'll put no. Okay. And what you need to know about that is there's been case law where the eligible dependent amount is denied by the CRA by virtue of the fact that one or both taxpayers were providing support for that dependent. And basically, what happens is they wipe out that credit, non refundable tax credit. Is it fair, unfair? Not much I can say about that, except that there's been a lot of case law around it. And back in 2015 or 2016, it was brought to the Department of Finance's attention, and basically nothing was done about it. It's all status quo. So be careful of that. Now, when you have the ex-spouse, it's important to identify the ex-spouse insofar as claiming the name of the spouse, the estranged spouse. Let's say Bernadette. I'm not sure if that's a first name or a family name. And over here, we're going to put Julie. Okay, address of the estranged spouse 1234 X X Street. Social insurance number. It's important to identify the other spouse, especially if you paid taxable support payments. Date of birth of the ex-spouse. Let's say it's 19/7/1997. Just like that. And was this person a Canadian resident in 2023? Let's say yes. They didn't go anywhere. Now, net federal income of your spouse before the separation, line 236 of her return, or net world income in Canadian dollars if the spouse was a non-resident. Warning, do not use the estimated income below the actual. So what does that mean? So basically what that means is in the year of separation, you have a choice. And the choice is between two amounts, either a deduction for the taxable support payments that was made under a court order or a written agreement. So those two little pieces of documentation are important, and without it, they'll be denied. So, and what do I mean by taxable support payments? Now, taxable support payments are uh, alimony, for example, and support. It excludes child support. Child support is non-taxable and you're not able to deduct that. So that's choice number one. Choice number two is the spousal amount based on her net income during the time that you were together. Now, here's the problem that arises from that. How do you tell um, what is the net income of your estranged spouse, especially if the breakup was not amicable and not amicable, and there's no communication between the both of you? I don't know what to tell you. I have no solution for that. That's something that is exactly outside of the uh, scope of the program. Uh, when I was in practice, that was a very problematic area. Do your best, and what we're saying here is try not to guesstimate below the actual amount. Um, you can, if you have records of how much income your estranged spouse could have made, you can try that. But again, once you're assessed, if the amount you estimated was lower than the actual, then the CRA will ask for some money back. Let's say, for the purpose of this example, I went through a very difficult exercise and I got $8,100. And here, TOSI adjusted net income of ex-spouse prior to divorce and separation, line 6 of T006. Basically, to make things simple, 9 times out of 10, the amount of her net income or his net income will be the same, not lower, not zero. And this section here, you would only have to uh, fill it if the person came to Canada sometime during the year, and then um, you ended up separating a short time later. So it does not need to be completed because in this case, both spouses were residents of Canada throughout the year. Do not answer yes simply because this person may have been born abroad. We tend to, um, I'll say the word, stigmatize people that were born abroad as quote unquote immigrants. But for tax purposes, anyone can be an immigrant provided they had ceased residential ties with Canada and subsequently reestablished residential ties to Canada during the year. So try not to use the word immigrant as a term for stigmatizing somebody. Um, Also, um, there is a distinct difference between immigrant and emigrant. An immigrant is somebody that leaves Canada and severs residential ties. Unfortunately, when I'm looking at certain internet sites and government sites, there's immigrant in, immigrant out. There is immigrant, somebody that establishes ties with Canada, uh, regardless of whether they were born here or not, or um, were living abroad or whatever. An immigrant is someone that severs ties with Canada, and it can very well be somebody that has been previously a resident of Canada and a citizen of Canada for a very long time. Okay, with that said, we have most of it done. Now, support payments paid is probably something that we're going to have to put through the interview section. What we need to establish now is the taxpayer's actual address, so we will put it in. Gee, did I say a lot in a very short period of time. Um, my city, and let's put Quebec. Obviously, this is a fictitious address, fictitious information, and province of territory. We don't really need to enter that, and a fictitious phone number. Do not call this phone number. If anybody answers, they'll be very shocked and surprised. Language of correspondence, for now we're doing in English, so let's put English. Are you filing an income tax return for the CRA for the first time? No. Oh, come on, we got to answer that. Property, foreign property, no, no. We're not a diplomat. Yes to the Elections Canada. Who doesn't want to vote? Um, Email, let's say no. And forward address, this is a mandatory question that the CRA insists on us answering time after time again. I will say no. Next, Revenue Canada or Revenue Quebec questions. Are you filing for the first year? No. Are you a person living alone? No, because this question has to be throughout the year. And if at any point in time you were living with your spouse during the year, this applies. Do you wish to request an accelerated refund for your? Uh, this is I've spoken about this before. Typically, I respond no. Just give me the refund once you assess the return and reviewed it for accuracy. Virtual currency, no. Let's say, for the purpose of this example, I'm going to do someone that has a low amount of income, but but is not entitled for one reason or another to the Quebec Solidarity Tax Credit. And tax shield, we always say, uh, whoever wants to claim it, and let Revenue Quebec claim it because they have all the data needed to calculate the credit. Receiving online correspondence, everything here is new. Notifications relating to your income tax return, no change, leave blank. And here, let's say no. Now, the situation that applied to you for the purposes of simplicity, he had his own drug insurance plan. Next. Now, we identify the spouse and ex-spouse without necessarily having to do a return. Um, Typically, again, when I was in practice, people were reluctant to get together and share each other's financial information to do the return accurately. Um, just have to do it the best you can, um, and hope for the best because typically the CRA can reassess and things can get messy. But anywho, there's no real workaround on it. So we answered all the mandatory questions. We're going to put in some income. And basically, what this person did was he was on CSST, but he did pay some support as per taxable support as per a written agreement. So let's say he earned 18,000 of workers' compensation, and somewhere along here you're going to find alimony, or support payments paid. So click on that, check it, put next. Now, for here, we have a Releve 5T007. That's a slip most Quebecers receive for CNEST, as we call workers' compensation here. T5007, that's for other provinces, so click there. And we have CNEST here, or workers' comp. Everywhere else in Canada, CNEST will be, um, let's say, 18,000. Social assistance benefits, no. And Box C CNEST is the equivalent of $18,000. Okay. And now we're going to go to alimony as well. And support payments made by you. Let's say we provided a payment of $6,000. So the name of the ex-spouse was Benadette Julie. Okay. Let's go back here. Benadette Julie. Address of foreign ex-spouse, 1234 ex-spouse X Street. Just like that. You can put in the name of the city, province, and postal code there. Social insurance number, 222-222-218. Total amount of support payments, we said 6,000. Okay. There's nothing arrears and no child support paid. And there is no child involved. Um, so basically now what UFile should do is determine what is better. Is it the spousal amount or the support payments paid? And keep in mind that what is important here is that the support payments had to be, she needs to provide you with a receipt for the $6,000, or you should have canceled checks if canceled checks still exist. And her name and social insurance number should be written on the receipt, confirming that you paid the amount. The amount has to be regular and periodic. It cannot be necessarily a support, a lump sum, but in certain cases, lump sums can be deductible. And there has to be either a written agreement or a court order um, that requiring you to pay this. Now, why are you paying support payments to a common law spouse? Because typically they're not allowed. I just want to show you the data entry really. Um, in reality, I'm not a lawyer, so I wouldn't know if there would be a case where there was a requirement, a legal requirement for them to have such a transaction between them. We could pretend that they were previously married. Again, one way or another, you need a legal document um, to you need a written agreement between the two of you. A legal document would be even better. Um, yeah. All right. So let's see what would happen. What would transpire here? Um, and if this falls under one of our free offers, because the person's income is well below 20,000, so there's no refund because this person had non-taxable income, and to boot, uh, does it matter whether we take the deduction or the non-refundable tax credit? No. So in this case, it's a very simple example just to show you the principle behind it. And ultimately, we got the non-refundable tax credit, 18 here, uh, 0 there. And the way UFile determined it was the taxpayers in the first tax bracket taxable at 15%, and with a non-refundable tax credits amounting to 21,900 at 15% and 12.5 for Quebec. Um, Ultimately, they don't owe any money one way or another. And you can get the Quebec lowdown pretty much on the Quebec return. It's the same principle. And as you can see, in Quebec, there is only spousal transfers. Um, there is no equivalent to the married amount. So we gave them the deduction here, and ultimately there is no credits. And as a matter of fact, yeah, he would otherwise have been able to transfer some credits to the wife if she was taxable. Tax saving ideas. It seems like you took already our benefit from all the tax opportunities. And let's see if this is a tax return that falls under the free offer. And it says, remember, almost done. You have qualified for a free return. Please click to continue. And by accepting this, basically, this account is locked to a fellow by the name of Fred DeMarco. Accept. We have now generated a tax return for Fred. And as you can see, we have an executive summary, and we have a quick snapshot of the return here under the executive summary, pointing out that there is no tax payable and only a GST HST credit applicable. We can take a look at the return. Actually, the return, if you were paper filing, would be the T1 condensed that would be sent in with the barcode being able to be read. Ideally, you want to use NetFile to send it without any problems. Okay, and only if NetFile fails do you actually should file paper file. And here's pretty much what the tax return is all about. Here's your workers' compensation, a deduction for it, the spousal amount based on the estimated income that we have. Hopefully we didn't underestimate it. 0 payable, and the Quebec return is done. And this Schedule 5 is actually for the spousal amount, and see how it was calculated. Here's the base amount of 15,000 minus for net income while you were together. Gives you a credit, a non-refundable tax credit of $6,900, of which you can only claim 12.5% if you're a Quebec resident and 15% if you are a resident for the rest of Canada. There's the Quebec return, all fine and dandy. Now, I won't net file this return, but ideally, what you need to do is go here, uh, ready for filing, submit it. You'll end up getting an acknowledgement report, PDF it, and then save and close. That's pretty much it. Now, there's a couple of links that I'm going to share with you that are important for your knowledge. So I was mentioning a common law spouse, and basically, this is something new for um, for Quebec for 2025, Bill 12, and it will be, what is the exact date? Well, before I get to the date, let me tell you what this is all about. So Quebec has a civil code, unlike the rest of Canada that goes under common law. And basically, um, this bill that has been tabled by the Quebec government will give equal rights for unmarried couples, creating a new parental union regime. And basically, in order to be eligible to fall under this regime, the couple has to have a child, be co-parenting a child, um, after this law has been enacted sometime next year. So, uh, what does this uh, bill aim to do? Um, Here it is. Once the law comes into force, a parental union is formed when unmarried partners become parents of a shared child, live together, and present themselves publicly as a couple. The union ends if the two separate, marry, or if either person dies. And apparently, it will only take effect as of June 30th, 2025. So all all the unions of this nature um, prior to this date will not be affected. And apparently, you could opt um, out of this type of relationship in writing. Also, just to give you an overview or scope of this, says, for example, it makes it easier to request compensatory benefit from the court for parents who believe they experienced losses after having contributed to the enrichment of other spouses' assets, Jolene Barrett said. That's the Minister of, I believe, Justice. Blended families will not be protected by the new regime unless the couple have a child together after the law comes into force. So that's an interesting read. I'm going to put it in the description in the video below. The other thing that I'm going to share with you is a link uh, describing support payments paid and how you can claim them. Okay, the details are here, right? Because I did a very quick overview. And the other thing that you need to know is how to inform the of your change of marital status to the CRA. And this is something that needs to be done well before you do your tax return. The other changes you can do is change your address, change your phone number, email, your name, which is very difficult to do, set up or change direct deposit, change a business address. And this is where you do it. You cannot do it through your tax return. In fact, if you wait until you try to do your tax return to do any of these changes, it might affect adversely your ability to transmit your return electronically. So I'm going to give you these information links, 1, 2, 3, in the description below. And with that said, we're done. We're going to save and close. And I bid you a happy tax season ahead. Please do not forget to like and subscribe and tell your friends about this channel. It encourages me a lot. I know I have a day job. I definitely don't need any money from subscription here. Not that I'm rich or anything. I'm pretty poor. But it's a great morale boost. With that said, take care and good luck to you throughout the tax season.